All right, what's up? It's me, Jamie, and Avery today. I'm taking Avery to the vet. We got to get something called volatile. It's for kennel cough. It's not a deli item. Because when you put a dog up at a boarding place, I guess some places require that for you to leave them there. So it's her turn to get that. The other day, last Wednesday, I took her to get her hips and elbows, along with Gabe, x-rayed. Avery. What's up? Anyway, all right, so what I want to talk about going with her today, obviously the stock market is doing what it's doing, and that's not what I want to talk about. Oh, that's not what I want to talk about today. Oops, I just banged over my trash can. Hold on, where was I? Besides having fun with Chloe and Sophia this morning. So I just took Avery to the vet now. I got her washed up. She was stinky, and I'm heading home. So what I wanted to talk about was investing. Investing, whether you're an entrepreneur, whether you're investing long term, and the differences and things that I'm just thinking about. Again, there's no charts today. There's no specific buy price, sell price. Usually I'm just saying, like, here's what I'm doing, whether you like it. It's just conversation. So I was listening to a video about real estate stuff because I'm heavily convinced that real estate is one of your best hedges. And this is through experience over a couple decades of people I work for that took their money that they've made in their business and then in turn invested it into real estate. So I'll give you a very quick example. Time and time again, over the past 25 years of me working in the auto industry, and I've worked for multimillionaires and even the second one, almost, one billionaire for sure. The other one is pretty close to being a billionaire. And those guys would invest profits into acquiring the real estate that they sold their cars on, that they had their body shops on, that they had their parts and service department on. They didn't lease. They might lease to themselves, right? But they owned the property. And what they would do, I found a lot of times, is they would acquire the surrounding properties around them, where they were able to buy a house or a business next to them and behind them, and they would just kind of grow their footprint and add more cars and more storage spaces. I've seen that time and time again. So I think real estate is a good thing because even if they end up selling it down the road, it's much more attractive to the portfolio in addition to the business itself, the business model. In this case, if it's an auto business where you're servicing cars, selling parts, doing body shop repairs, and retailing new and pre-owned vehicles, then you might say, hey, we sell this many cars a year. This is how many repair orders we do. They're called ROs, service orders, and this is what our net profit is, and our operating expense, and all that kind of stuff. It's going to be attractive to an investor that is buying other businesses and adding it to their portfolio. That says, all we got to do is find someone to manage that, and go from there. So I was watching this real estate video. And what it was saying was, it was this gentleman who was a retired police officer, not David Green, which I like very much for Bigger Pockets, but it was a different gentleman. And what he said was, he was lazy. He continued to work, but he was acquiring properties over a course of, I want to say he said 8 years, right? And for 2 years, he was doing traditional lending, and he had to get the bank to say, hey, we'll give you 70-80% of the loan, but you got to show more income. So what he did is he moved out of his primary residence, rented it out, showed it as an income, and he went and he rented, somewhere else. He was renting. And this allowed him to start getting into real estate and buying stuff, and then eventually got to the point over the course of 8 years was his story, where he now has, I think he said he had 16 units, and he generates about 130, 140 grand a year from these units. And for him, that was his freedom number, where he was able to not have to work, even though he does still work, but it's optional. It's optional earned income, where he's not required to go there. And he's like, hey, I'm retired now. And I think he's probably in his, I would guess, mid-50s, I would say. Somewhere in the mid to late 50s, just guessing. But I thought it was interesting because I have had an entrepreneur spirit for many, many years. I failed in multiple businesses. I've had an S-Corp. I've made money, but I've lost money more than I made it. But the lessons I've learned just from doing it were invaluable. And that's why when I encourage my oldest son will be 21 tomorrow, and then right on down the line from the 16-year-old to the 20-year-old, to the soon-to-be 10-year-old in November, and then the littlest one is just turned 7. I think about them and things that I would want to say and do to encourage them that I didn't do and nobody told me, which this is my message, my evangelistic message of having knowledge, having information, wherever you get it, whether it's from me or from the multitude of way more credible sources than Jamie is. But when I think about investing, and I have some shares of Tesla in the Robinhood account, which I've been talking about. Today's earnings, regardless of what it ends up doing, regardless of the outcome, what I was thinking about is if you were going to park any money, whatever your strategy is, and you said, okay, I have a 1 year, 5 year, 10-year horizon. Let's just say that. If you were going to allocate some money, because I had somebody recently ask me what they could do with 110 grand to be exact, and not because they were going to give it to me, they were just getting my input. Like, Jamie, what would you do with 110 grand? That was if you wanted to see a return on it. And I said, here's some suggestions to think about. And one of the things I thought about since then was, if I was to take $1, $100, $1,000, or fill in the blank with the number, and if I was going to buy a company like Tesla, now I've become an investor. I did not invent Tesla like Elon Musk, but I think it's a good company, and I want to invest in his company. I don't want to go out and start my own EV company and solar, charging stations and all that kind of stuff. I want to, or EV charging stations. I know he has solar stuff too, but I'm not looking to go out and do that. Any more than if I'm buying real estate, I can do some basic stuff, but I don't want to learn how to rewire a house like a master electrician. I do not want to become a master plumber, carpenter, any of that. I would hire the guys so I could free up my time, right, to do the things that I know how to do, and pay those guys that are professionals, that stand behind their years, decades of work into the job if I trust them. Because I will pay them, and I'll pay a hefty premium to get the right ones if they're reliable, trustworthy, do a great job, stand behind their work, because I know it's done, and that frees up my time, right? Like, I don't have to worry about things. So it's the same thing if I invest in a company like Tesla, whether it dips to 150 or 160 or 180 or whatever they're saying it might do, which it could, and I own it for 200, 220. If I was to keep investing over time, over that horizon of weeks and months and years, and saying, okay, I'm just going to keep investing because I think Tesla, fill in the blank, doesn't have to be Tesla, is going to go up from 150, 160. It's at 2 something right now, 2 teens. But if it drops down to 150, 60, 80, and it pulls back because of market conditions, not because the company is not a good company, then that's great. I'm going to keep buying some shares. And if I'm not trading those shares, like a day trader or a swing trader, and I'm investing, then over 5 years, that stock value could go up to $300, $400, $500, $600. Who knows? Maybe more. And not only do you get the appreciation or the return or whatever that percentage is over that time frame, because you got to put your money to work somewhere. What I also thought, and it's just something to think about, is a lot of people that I know, not a lot of people, but some of the people that I know that make weekly and monthly income from from the stocks that they own aren't the ones that just hold it, right? They just hold it and say, I have 50 shares and I'm adding. I have 60, I have 100, I have 500, I have 1,000 of Google, Amazon, whatever the company is. They keep adding to their cup is full to whatever their strategy or their target is, and then just hold it. And they say, okay, my yield from my dollar cost averaging over the month, year, 10 years, I made 10%, I made 20%, I made 50%, I 5x or 10x my money. Great. But if you could sell covered calls for those shares each week, each month, and earn some extra money, 500, 1,000, whatever percentage from that, that's the value, because it's tough to buy Tesla at 600 to buy 100 shares. It's going to be harder than it is to buy it at 180 or 200 if you're in that position, or if it's Palantir, or I don't know, whatever the stock is. I'm not trying to promote Tesla. I mean, it's just something to think about. Where I remember when Tesla was a couple $1,000, and when you were selling covered calls then, I mean, the premiums were anywhere from $1,500 to $2,500. You know, fact, depending how close to the strike price you got and how far out your expiration was. So that's a lot of money you can earn. Like, you can make a couple grand a month or more on some of these shares selling covered calls. And these are for companies you're going to own anyway. So just something to think about. So whether you're an XRP guy or a Bitcoin person, where you might say, hey, Bitcoin is going to go back down to 3 or 4 grand, I'm hearing. I did hear that. I don't know if it will, but it's going to cause people to say, oh, I don't know, I'm going to hold off. I'm going to wait. I'm going to put my money over here or there, do something else. And then the value, you know, it's like people getting out of the pool, the water was higher, and then it kind of comes down, right? So I think that I like Bitcoin. I will allocate some money towards Bitcoin, maybe not as heavily as I would before, but because I think it is going to go down into the teens, maybe between 10 and 20. And but I still want a dollar cost average there, because in 5 or 10 years, that will be one piece of land, so to speak, that I own that will produce some type of yield. And it's just something different besides just a 401k, IRA, you know, index fund, bond, whatever else you're doing. And I am not a wealth management person. I have a couple buddies that are, but these are things that I think about now as I have these discussions. So whatever the market's doing today, the market's going to do. And it's just like a relationship. You know, your husband or wife may be emotional, you know, and get very I don't know, say or do things that can make you nervous, right? Or make you not nervous, but, you know, make you like get like, whoa, what's going on here? But, you know, like, I know my wife pretty well, and I don't get nervous. Like, I don't get worried. I don't take it personal. Usually, not all the time. And pretty much all the time that I do that, later on everything's fine. You know, just venting, right? That's a relationship thing. That's a spousal thing. Maybe I could do a different channel on just that, or even just kids or dogs, right, Avery? So anyway, that is my thought for the day here on Wednesday on earnings for Tesla, 10/19/2022. It's Wednesday. I think Tesla's going to have some good earnings. From what I'm hearing, again, that doesn't mean that that's what's going to happen. But whether it shoots up to 240, 250, I will tell you this: I took my ring off, not because I was washing Avery and it kept sliding off. So I put a exit on my. I'm selling a covered call right now in Robinhood. Maybe I'm going to edit this, so I'll drop that in. So I have a covered call with a 232 strike price, 232.50. The premium I collected was 360. I hope it fills, because I'll just keep the 360, and I have 25 more shares. So I'll exit that position, because I think Tesla is going to eventually pull back down under 200. And the other 25 shares I have in Robinhood, I'll see if it does pop, if it does get into the 240 range, and you know, I'll take a profit on that, a couple $100, whatever I can make in that. But that is my strategy for Tesla. Just speaking of Tesla, amongst all the other stuff that we're looking at. Entrepreneurship, investment, you know, whatever you're doing, Just make sure that you're thinking about it before you actually, jump off the cliff or whatever you're doing. All right, guys, I'll see you next time. Avery, do you want to say goodbye? Speak, girl. Speak. All right. I'll see you later. Have a good one.